All right. So once again, if you look at this little section here, we completed our very first one, which was the company setup. And then we completed our employee setup. Now, the next thing I'm going to do is our tax setup. So this is setting up basically all the taxes that you are obligated as a company that you have to pay. So such as your federal tax, right? Your state taxes, anything that you collect from your employees, you are responsible to pay for it as well. So all of these are going to be considered liabilities to you, because at the end of a given period, so usually it can be quarterly or monthly, you have to submit your 940 or 941 form, which allows you to pay for those federal taxes. So once again, as a federal, right, you need to file the form to pay into the federal income tax withholdings, as well as the Social Security and Medicare. That is an obligation, and if you fail to pay for it, you will be penalized, and it's not a very, nice fine. It's very heavy, right? You could be taxed, or you could be increasing your taxes, of course, but the penalty is not very good. It's very, very high. Could be anywhere from 10,000 to even beyond that, depending on how many employees that you own or that you have, but also how much money you owe. So it's a huge fine to make sure that you pay on time. So that's what we're doing here. We're going to be setting up the accounts, because nowadays the easiest way for companies to collect, for the federal government to collect the money from these companies is through electronic funds transfers, okay? Because again, any major corporation that has billions of employees, that's the quick and easiest way to get your $1 billion that you have to pay into the federal government. So once again, here we are at the taxes section. So let's go ahead and click continue. So once again, as you can see, we have a list of all of these that are mandated that we have to pay. Okay, as you can see, first couple ones are your federal tax withholdings. All right, here we have advanced earned income. All right, we have federal unemployment. We have Medicare. Okay, for both employee and company, and we have both social security for both medical and employee, as well as so I did say social security. Okay. So these ones are obligations. Okay, and we're gonna go ahead and click continue. So once we do that, now we also have to set up our state items here. So let's start off with each one. So as you can see, California, the state of California has to pay unemployment, as well as what's called the disability. So they have to pay into disability. Okay, so let's go ahead and take a look at this. So, all right. For the state of California, we're going to work with, so every time we get this window, what you're going to essentially do is, if you see these little error here, right, it means that you need to set it up. There's something that's wrong with it. You need to set up, you need to link it to a specific account, or you need to set up some kind of agency for QuickBooks to know exactly what they're doing when you collect state taxes. Okay, so in this case, when you do click on this page and you're going to get this window, you're going to be working through each and every single one. So it's going to go down the line. So the first thing you have here is your EDD payment. Okay, so here, your EDD payment is going to ask you what percentage of the employees that you're going to be taxing them at. So in most cases here, it just depends, right? You have to look up your agencies, right? Especially when it comes to which taxes you are actually looking at. So again, every state's going to have a specific tax, okay? For example, state of Nevada, right? When we pay unemployment tax, it's 3%. Okay. So it depends on what the state that you are looking into. Once again, I would definitely seek a tax accountant for this so they can help you set this up as well. Okay. So right here, it says that you're going to be taxing them, your employees. Let's see. The payroll tax item setup list. Okay. So we're going to go ahead and the first one is going to be 3.4%. But in this case, I can't enter in a percentage. I have to enter it down here. So how this works is if you do 1%, okay, or 0.1%, that's just the 99 rule. It's kind of hard to understand, but once again, if you are the person that is the payroll or the HR in charge of paying your employees, you guys would actually learn a lot more of what this section is. But here it is 3.4%. Okay. All right. Okay. And then you can go ahead and click next or finish. Okay. And there we have it. That's the only one that we had to just edit as far as that. But yes, so as you go through each one, make sure that it is going to be making sure that every tax that you do have, you set them up on which agencies that you need to pay. So again, if you double click on them to edit any information, you fill in as you go. Now, again, with QuickBooks, it looks up the information for you automatically and it gets you connected. The only thing that you have to do is just link the vendor or link the account number, which we've already set it up prior. So in this case, they've already set it up for you. All you have to do is just link what taxes belong to what taxes. So there you go, 3.4%. And then you can go ahead and click continue. So here, now we're going to have a list of all of these things that you have to fill out as well. So these are your dealing with your the California and the federal here. So this is where you're going to be, utilizing your 940 form. Okay, so we're going to start with the very, very first one, which is going to be here. We're going to select EFTPS. So that's, oh my gosh, I forgot what that is already. It is it's in your book. The Electronic Federal Payroll Tax Transfer Bank Account. The EFTPS, Electronic Payroll. Yeah, there you go. Thank you. Again, that's what it is. So we're going to put that as EFTPS. Yes. Okay. So once again, these are all pre-set up already for you. And all we're doing is just making sure that this does go through. Now, most cases, right, when you go here and you choose your payment, if you're a corporation, you're most likely going to have to pay sooner than later. If you're a small business, then you can get away with making annual payments. But in this case, QuickBooks has already assigned it for you. Your only option here is quarterly. And then you're going to go ahead and click next. So now it's the next one. The next one is also going to be anything that's federal. Here you go. Oh, yeah. It's going to be EFTPS. So this is your 940 and your 941. So EFTPS. Okay. And once again, this one, you have more options and ranges for filing for this specific tax. So right here it tells you. But in this case, you want to make it all consistent because especially if you have different bills and different payments to the government, it's going to be kind of harder to keep track of. So the best way that you should do everything is make everything easy for you to be able to make the payment. So make them all the same time period. So in this case, I'm going to make this one quarterly as well. I think in the book it says monthly, but that's okay. It makes sense that you make all your payments at once instead of pay this here, pay that there. I have to pay that there. It's better to just try to make them all under the same kind of pay schedule. Okay, and then now we are on the state. It's going to be for the EDD. Okay, for the California withholdings and the California unemployment, it's going to be the EDD. And here, the account number is going to be 1, 2, 3, 4, 5, 6, 7, 8. Okay, and once again, it is also quarterly. And it's, I think it's the only option you have. You only have quarterly. So the state obviously wants you to pay every 3 months. And then once again, the last California one is the unemployment is also going to be EDD. Same exact account number, 1, 2, 3, 4, 5, 6, 7. So once again, this is also an electronics deposit. Okay. So again, this account number that you're entering in is the account number that you're going to use to transfer the money over. And once again, this one gives you the options. We recommend to just make all your state payments the same. Make all your federal payments the same. So the other one, you only had the option of quarterly, so make everything the same. All right, it makes it easier for you to pay for your taxes without forgetting, because if you forget a payment, you will get fined. Okay, so there we have it. We set up the federal taxes as well as our California taxes. So once again, this is form for federal, it's form 940 and 941. For the state, it depends on what state you belong to. So whatever form that you do use, it will depend on the state. Okay. All right. So there we have it. That is all the taxes that we have here. And any questions on filing taxes? Okay. Once again, QuickBooks does majority of the work for you, especially how did we come up with the California tax. So if you guys remember from the very, very beginning, we stated that our business is doing business in California, in Santa Clara area. Or in this case, I think it's San Jose that we had our company in, Main Street, San Jose. Now, because of that, that means QuickBooks went on the internet and says, okay, well, if you're doing business in California, therefore you're subject to these California taxes. So that's the cool thing about QuickBooks, is it looks up the information for you as well. But once again, you need to take that extra step because you need to make sure which organizations, which agencies that you're making your payments to, right? Not every QuickBooks is not smart enough to do that for you. You got to do that part yourself and enter it in as a vendor. And then if there are electronic fund transfer, something like that, then you have to set up the account that's associated with them. Okay? So, yes, sorry. Any questions in regards to filing taxes? Okay. Now that we completed that last section here, the last section is going to be entering any year-to-date information. So once again, if you are using QuickBooks, okay, and you are a pre-existing company and you're switching over from manual to QuickBooks or from another accounting software to QuickBooks, you will have year-to-date information, especially when it comes into your employees. But in this case, the book is assuming that you are starting your company from the very beginning, so you don't have any year-to-date information. So when you do go ahead and click continue, you're going to say no. I do not. Do you? So do you have any year-to-date information? You're going to say no. Okay, so has your company issue paychecks this year? No. All right. Once you click that no, that's it. If you do click yes, I believe your book tells you what instructions you have to do. So for every employee that you have, you're going to enter in, obviously, how much taxes you paid for each organization, how much have you paid them so far, or what paychecks you've sent out, and you're going to fill in all that information so your books are up to date to whenever you last for your accounting period is. Okay, so if you close out your accounting period every year, then you only need to do it for the year of. You don't need to do it for all the way when you started your company. Okay, it's only year to end. Okay? And of course, like I've mentioned before, this book is just teaching you the very basics. It's not teaching you the in-depth of how to run your business, especially because, once again, QuickBooks is not meant to run your business. It's meant for you to easily file your taxes, okay? By putting all the information about your business, so then it pulls the information and it makes it easier to file your tax forms at the end of the year, okay? And I'm going to go ahead and click continue. So once you've done that, you've reached the end of the payroll interview. Okay, and then I can go ahead and go to my payroll center. So there you go. There you have it. We completed our payroll setup. Okay. Once again, if you make any additions, you can go back to the employees, and you can go back to the payroll setup at any given time, as you've seen before. When you do set up a payroll item, or you need to set up a new payment, whatever it is, right, and you have to add it in there, recommendation is to use the payroll setup, because there is a lot of information that you need to tack on, especially with your payroll items, okay? We've seen it firsthand. It's a lot of information, and you want to make sure that you do file them properly, okay? Other than that, I want to show you, so once again, how we actually, as I mentioned before, in the very beginning of the class, right before we started the payroll setup, let's go ahead and take a look at our payroll items now. So as I've mentioned before, right, every time, or not every time, but when we looked at going through the payroll setup, we essentially created our payroll items, and here they all are, okay? Now, of course, if you're doing this manually, you can do it manually, but like I've mentioned before, you're better off probably using the payroll setup, because, again, you can just create the item just like how you create every other item, right? By going through here, and you can set them up however you'd like. So once again, if you guys remember from the very beginning of class, we only had four things, right? Our federal, Social Security, and Medicare. Now look at it now. We have a 408, 401k plan. We have Medicare, health insurance. We have compensations, right? We have the California section here, right? Not just only our federal. We have a whole bunch of other things. We have salary and regular hourly, right? We have salary vacations as well. So once again, as you go through the interview, you're essentially setting up your payroll items as you go. And like I've mentioned before, you're better off using the interview to go ahead and set up your items. Okay. So a few things I want to show you is I want to show you how to enter your employees. Now that you've got to enter one the first way, right? Just like I've mentioned before, you can enter them in just like you're entering a vendor or a customer, right? You click this new employee, the new employee at the top of your window, and you're going to get the same exact form looking like form that you've seen before, right? You're going to enter in any addresses, any additional information, any payroll information, etc., 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 right? You are just going to fill us out. Now, looking at this way, it looks 10 times more easier than going through that whole interview. So again, if it makes more sense to you to just go ahead and fill it out this way, then you may do so, right? No one says that you can't do it. You don't have to set up all your employees using the interview. It just makes it easier so you know exactly what information you need to get from your employee. But of course, with QuickBooks, we know that no matter what given point in time, we can adjust, edit, and etc. Right? Let's say your employee decided to has a new location or they moved to another state. You can enter in the information there. Okay. So once again, you can edit the information at any given time. You're not limited or having to do at a specific time. Now, of course, you definitely want to do it the day that they apply, obviously, or the day that they start their job, because, of course, if you're going to keep track of them with their payroll, you want to make sure that you have all their information, run your background check, whatever necessary it is that your company policy does, right? Whether you run a criminal background check or you run was it a drug test? Whatever information that you can do in order to ease your way to having your employee actually work for you. Maybe you might do a what's it called? A fingerprint identification just to make sure that you are a legal person, okay? Or some kind of identification check. So yes, you can do that as well. Those are all things that you have to, if as a company you should do, right? But once again, you have to make sure that you at least enter in your employee before they start before they actually start processing their payroll. Okay, so that's just one way of doing it there. Now I'm going to show you this so it makes it easier for you to enter in employee information, because the next section I'm going to talk about is going to be employee defaults. Now, what are employee defaults? So if you go to manage your employees and you click on employee defaults, okay, change or add employee defaults. So what this does is that every time you add in a new employee, it will help you fill out the information so you don't have to go through it and fill it out all the way. Okay, so let's say the next batch of employees that I'm going to place in here are all going to be hourly wage people, right? If they are, then list them here so it saves you some time, okay? So for example, right, if I didn't do any employee defaults, okay, and I decide to enter in an employee manually, right? If I go into payroll information, look at this. I don't have any payroll period set up except for biweekly. I don't have a class that is set up. They don't have any compensations or they don't have any benefits that I can do. So what you can do here is to save some extra time. You could do that by setting employee defaults. So then when you add that information, instead of having to add all those payroll items and stuff, then, it helps you save a lot more extra time. So once again, here it says the pay frequency is already set to biweekly. What if it isn't biweekly? What if I want to pay all my employees twice a month? Okay, class, I could say they all work for the San Jose location. Okay. Earnings, right? What are they? They could be hourly regular. Okay. All right. And what is their annual income? Let's say you charge all of your employees, right? Or not charge, excuse me. You pay all of your employees, I don't know, to $15 an hour. Okay. And then what items can you deduct from their paycheck, right? You can deduct Medicare or health insurance, right? Medical insurance, right? Which we know is $100. We can offer our employees to have the 401k, right? Both deduction and 401k, the company matches them, okay? And of course, it's going to be 4% of their paycheck, right, is what they are going to be putting in, and the company is going to match them 2%. So there it is. And then other things that you want to add in there, such as if they do any sick or vacation pay, right? You can click here and you can toggle what each one that you're going to offer them. If it's sick or vacation pay, how many hours does each person get? You can set that up as well. So at the beginning of the year, right? Hours that can be accrued at the beginning of the year I'm going to set them at 0 because they haven't accrued any yet, right? The maximum number of hours is, once again, 200. Okay, they can rack up to about 200 hours. Okay, maximum type. Okay, maximum hours at a time. So again, you can choose. They can't just take 200 hours for one whole week, right? So you can set a maximum there. But that's for sick pay. But again, we don't have sick pay, so that's kind of doesn't make any sense for us. But for vacation pay, yes, you could do it at the beginning of the year. So actually, this one goes here since I don't have sick pay. I do have vacation. Maximum hours that they can do is 200. Reset hours. So each new year, I'm going to allow them to have a new set of 200 hours. Okay, I don't want to do any overlapping or any of that. Okay, or carryovers. Okay, sick and vacation accrual. Okay, sick and vacation pay, hours paid, or you want to do overtime. In this case, I'm just going to leave this one blank and I'm going to click OK. So look at by me filling all this information out, right? Let's see, payroll schedule. We'll talk about that in a second, but there isn't any here. Payroll frequency, we've already added as semi-monthly. Whoops. I clicked on the help button. So once again, it's semi-monthly, and we've entered in our information. So then I'm going to go ahead and click OK. So then the next time I enter in a new employee, and I go to payroll information, it's already filled in for me. Okay, I have my hourly regular. These are the deductions that are taken away or additional pays. You have the class that they work for or the location, store location. We pay them twice a month. Okay, so once again, and it makes it that much easier to go ahead and enter in your employee information. You don't need to do the payroll part because, you've already done the work for them. Okay? And of course, you've already set their sick pay and vacation pay. So if you click on this, they only have a maximum of 200 hours. Okay, starting January. Okay. So once again, that just saves some extra time for you to go ahead and set that up. Now, of course, you can change it. So for, let's say after you set your 10 employees that are hourly regular, you can go ahead and also make changes to it. So then the next set of people that you enter in that are new can be salary-based people. Okay. So once again, that's just a technique that helps you put in your employees a lot quicker. And once again, especially for a company, right? On average, a small company should have at least 25 employees. And of course, every employee is going to have different scenarios, right? You have a whole age range, right? Because anybody can work that's the age of 18 and over. Right? They can file as married. They can have a child that they want to claim as a dependent. They can have a lot of information, and plus maybe you don't want to pay everybody the same. Right? What if you have an intern? I'm going to pay them at least the minimum wage, while someone who has more experience can earn, a higher rate. So you definitely want to take into consideration of that. And, once again, every employee is going to have a different case scenario. So that's how you set up your employees. It's the same exact as your customers and your vendors, right? And this way, it's just one technique that you can use to help you fill out the information a lot quicker. All right? Any questions about employee defaults? No? Okay. So now I'm going to talk to you about a few things. So in Chapter 11, we're going to be taking a look at how we're going to pay our employees using a prepaid payroll service. So here we just set up the basics of how we want to run or how we pay our employees, right? That's just the basics, right? Now, the next thing is you have the choice. Are you going to pay into it because they offer a system? I'm sorry, there's three choices. You can either pay you can outsource your payroll system to another organization or another company. Usually the bank accounts have one of those agencies, or you can go to an actual payroll service company, okay, to do your payroll for you. Second option is you can choose to have Intuit. They offer a service for payroll for you as well. Or the last one is manual payroll. Now, as a small business, manual payroll, you can do it. It's not as recommended. Just because like the numbers that you have to look up have to be very, very specific. Okay, and especially having to deal with all the state taxes, those are going to be per case basis, right? Where the federal is already established, right? 6.25% is already going to be your Social Security. 1.45% is your Medicare. Things that are going to be things that you have to do is you have to manually calculate each individual federal income tax withholdings. So therefore, you need to have their W-4 form, you need to have a lot of information, and you also need to obtain the proper tax tables, okay? But if you are using a service that Intuit offers, right, they have packages that you can choose from. So if you go to employees and you go to payroll services, where are you? Payroll service options, right? And you click on that and you want to do learn about payroll services. And these are the three options that you will have the choice that you can learn about. Okay, it's accessing the internet. So here are the three services that you will be learning in Chapter 11 because we're going to take a look at a sample file of Intuit, what they offer you as a company, right? Because it's better that you just have everything all in one place. So linking your bank account, right? We talked about bank feeds. We talked about buying checkbooks from Intuit themselves, okay? And here we're also looking at Intuit's payroll services. So in 2018, you have the assisted, you have the enhanced, and you have full service. Here, I'm sorry, assisted is not it. You have the basic, okay? You have the enhanced, and you have full service. In 2019, they changed full service to assisted. Not a big deal. And you can even chat with a professional accountant with Intuit to kind of see which payroll services works best for your company. So once again, each one that you're looking at is going to be based on the number of employees and also what you want to do. So if you are using QuickBooks to help you file your taxes, they will recommend you that you either have to get an enhanced or the full service, because the basic only allows you to process the payroll and just pay your employees. Okay, where the enhanced and the full services allows you to also help you fill out your 940 form and your 941. Okay, so that's just a little heads up here. Tomorrow we're going to take a look at a sample file of using the basic version of the payroll services that Intuit offers. And it's going to be so quick and easy to process a paycheck, right? You just click on them and it runs the numbers for you, calculates everything for you, and boom, that's it. It does everything for you. And all you have to do is just click pay your employee, right? So that's what's the cool thing about having a payroll service be connected to your QuickBooks and it helps you manage your taxes as well. Okay, so that's just that section there. Okay, these are the three options. You will, I believe it's chapter 11 that you learn about more of this. But once again, just looking at the differences of what they offer to you is going to be, again, how you determine which one you're going to be looking for. Once again, if you're a small company, you're more likely to use basic. A medium-sized company, you'll use enhanced. And then obviously if you're a corporation, you definitely want to use full service, because if you have 1 billion employees, you definitely want to do this. Most cases, I'm going to tell you now, it's actually cheaper to outsource. Okay? Way cheaper to outsource, because Intuit, look at their prices. It is a monthly subscription, not you buy it once and you're done. No, it is a monthly subscription, and depending on which payroll option you choose, you gotta pay it every month. Okay? And as you can see, right now they have a special deal. But as you can see, the assisted right now is $65 a month, or you can do $408 a year. That is a lot. Okay? That says, 109. That is a lot. But right now, it's special deal right now. So you take advantage of it. But once again, that rate's not going to stay the same. So that's a lot of money that you have to pay for a payroll service just to calculate the information for you. Okay? So again, we'll visit the basic one tomorrow, okay, in chapter 11. Right? So that's that. Now, I'm going to show you something else. I'm going to show you how to do a manual payroll, okay? For those who are planning to just to see or to test out how it works, you can do a manual payroll system, okay? Once again, it's not as recommended because you're using an automated system. Obviously, you have technology, right? You have the internet, but you can do manual payroll. How do you turn it on? You need to go to your edit preferences, and you're going to click on your employees or payroll. In this case, let's see what it is. It should be payroll and employees, right? You're going to click on this, and you want to put on full services. You could say no payroll, but I want full payroll. Okay, and then I'm going to click OK. All right, once you've done that and it's activated, then you have the options down here below where you can enter your time, pay your employees, or pay your liabilities. Okay, so this was already set for us, but however, you need to activate it in order for you to do manual payroll. Okay, second thing that you need to do is you need to access the tax tables that you can find at irs.gov/publication15T. These are your tax tables that you're going to be using for one of the choices, right? In this case, you definitely want to use the automated payroll services, so that once again, if you're using the Intuit one, then you're going to use this table, right, for the automated one. Okay, but because we are looking at a manual type of payroll, right, our table that we want to use is going to be table number 4, which is going to be to calculate manual payroll for a manual payroll. Come on, there you go. Table number 4 is going to be percentage method table used for manual payroll system. So therefore, because we're not using the prepaid services that Intuit offers, this one we're going to be using this one. It could be table 4 or it could be table 5, depending on which W4 form you're looking at. But once again, I've mentioned before, from here on out, you cannot submit a 2019 W4 form if you're starting your company in 2020. Unfortunately, you can't go back in time. So in this case, you're moving on forth. This would be the best recommended table because, if you do end up creating your own company, you're going to be creating it after 2019. And of course, your employees are mandated to fill out a W-4 form that is 2020 or that is the W-4 form for 2021. Okay. So once again, here is a few information. So you will be getting each table depending on what they were. Okay, whether they claim as a single status, or they claimed as married, or they claimed as head of household. Okay, but in this case, because I'm using the 2019 version, right? I'm going to assume that since the company's been there since 2008, that I do have employees that could potentially submit to me a W-4 form of a 2019 or earlier. So again, Miss Katie Reynolds, right? We talked about the W-4 form. If you guys have filled one in the past, I'm pretty sure you have. It is different now moving forward from 2020 to 2021. Okay, so back in the past, we got to accept what's called withholdings. You could claim a withholding if you're the head of household. You could claim up to 10 dependent children as each is a withholding. So you can have a maximum of I believe a total of 10 withholdings. That is your maximum, right? You could claim yourself as the self person or the head of the household. You could also claim as filing jointly or married, right? That's a tax credit. That's a withholding that you can take, right? So here, we're going to take a look at this one just because, we're in the 2019 version of QuickBooks. So this is going to actually make it a lot easier to file. But once again, if you are building your own company as of now, you definitely want to do a little research. For those who are going into my accounting class, you will get to take a look at how to do a manual payroll using the new W-4 form for 2020, 2021. Okay, but let's go ahead and take a look at this. So here are my withholdings, and this is how you're going to do the manual payroll. So let's say I'm going to click my pay employees, right? Here then pops up a window. There it is, right? What am I going to make a payment to? When is the payroll period? Etc., etc. So in this case, I'm doing a very simple example here. So usually, if I'm going to pay them on a semi-annual or semi-monthly type of ordeal, that means I need to make this as of the 1st of the month all the way to the 15th of the month. So we're not even there yet, but that's okay. Let me do the month before that then. So let's say it is from April 16. Oopsies. Start date. Wait, hold on. Date of the payroll period ends. Okay. So in this case, it's gonna end on the 31st. Okay. When is the check available? It's going to be available on the last day of April. Okay, I clicked the wrong one. I clicked May 31st. It's supposed to be April 31st. April 30th. And then the check's going to also be dated that as well. Okay. Print paycheck on the check stock. Okay, we'll talk about printing paychecks tomorrow. But what essentially I want to do is show you how this works. So once again, you typically want to actually set up a separate checking account that deals with primarily just only your paychecks. Okay. Reason being is because it makes it easier for you to, if in case your employee, it also allows you to set aside money to pay your employees, essentially, right? Because one thing that you have to know here is that as a company, right, you're going to be paying bills left and right. And by you checking this amount, right, what if you said, okay, I should have enough to pay my employees, but you don't? Then you're going to be in a pickle because now you got to tell your employees, hey, I'm sorry I can't make a payment to you today. You have to wait a week later. Your employees are going to be super mad, okay, because you can't even afford to pay your own employees. And they've worked hard for you, whatever it is, right? So in that case, it is recommended that you do create a separate bank account just so that you have enough money set aside to pay for your employees. Okay, but in this case, my checking account, it's got $17,000 in there. So that's definitely enough to pay for my employees, okay? Once again, the payroll period is going to end on the 31st, and I am going to make the check available on the 30th. Sorry, I said 31st. Okay, so what I'm going to do is I am going to click on Katie, and I'm going to click on her, and now this is how we actually set up her manual payroll. So as you can see, all the things are there. So the question is, QuickBooks, since I set her as a salary, and I set her as a semi-monthly paycheck, so that means she knows that she's going to get paid twice a month. Then it automatically took the $60,000 and divided by the number of paychecks that she's supposed to receive, which is 24, right? 2 per month. So 60,000 divided by 24 gives you a total of 2,500. So that's how much earnings that she's going to receive. She's not a based on hours, it's a salary rate, okay? And let's just say she actually worked a full 80 hours. So in this case, we can validate that because her maximum hours that she can claim as a salary person is 80, okay? Here, we see that we have our deductions, but we don't know what they are. You have to calculate it, okay? So as we've mentioned before, right? These are deductions that are going to be taken after the taxes, of course. So here, we need to set aside. So what was the deduction for the 401k? We said it was 4%, right? Okay, so here, we're going to say that it is negative 4%. Okay, and we're going to say this is 2%, right? Because as the company, we're going to match your 2%. And then now you actually have to calculate that. Okay, so now we actually, what does that say? This field contains an invalid. Okay. Okay. All right, 2% is fine. 2%. There you go. Okay. So once again, not $2. That's why I wanted the percent. Let's see if it will let me. Okay, there you go. I must have did a typo somewhere. So here, this is where you have to manually calculate, and we've learned this before. You could do that by the quick math, right? You're gonna type in here that's come on. Okay. 2 is not a payroll item. Oh, okay, my bad. Cancel. So I'm in the wrong one. So this was the 401k deduction right here. We already put the rate right here. So this is, we have to click on this section here, and you're going to type in, oh my gosh, okay, it's not working for me. I don't know why, but it's supposed to fill in the numbers of exactly how much you're going to be doing here. Hold on, let me do the deduction. So, okay, never mind. It's down here. Right, it shows you that the 401k deduction is calculated right here. So there you go. That's it. You just have to type in the rate there. So as you can see, I said it's going to be 4%, right? So therefore, it took 4% of her. So the 2,500 times the 4% is going to be $100. Okay, and therefore the match is going to be down here, right? The company matches $50. Okay, so there you go. You just have to fill this part in, and it will calculate it for you on the side. However, now let's take a look at what we have to fill in, because this information, they're all zeros. Okay, so you actually have to manually go through every single one and enter in whatever it is. So for example, the federal tax withholdings, right? That's where we got to go to our table here. Okay, so if you guys remember, she filed as married status, and she claimed 2 withholdings. So what you can do is you can do a little Excel sheet on the side. Usually that helps when you're doing a manual type of payroll. Because, I mean, you could sit there and enter in the formulas in the QuickBooks application, but once again, you have to deal with too many things, right? You have to keep looking back and forth. What is the amount that she earned? Okay, so here I'm gonna note that so when we do payroll, right, you need to know that how the table works. Okay, so in this case, we're going to take at her gross earnings. Okay, so we know it's 2,500. We have to deduct because 2019 says that you're going to deduct your withholdings. The first thing it's going to do is you're going to deduct your withholdings. So here it says that you have to go to this table here. In this case, this table says that she's getting paid every 2 months, so every withholding is $179. So therefore, you need to figure out, she has 2 dependents, right? She claims 2 children. So in this case, you're going to have to figure out what 179 times 2 is, which is going to be $358, and that's going to be taken away from your gross earnings. So here is the adjusted gross, and that's going to take your 2,500 minus out your 538 to give you a total earnings of 2,142. Now that we have this number, we're going to go to our table and we're going to look up that number, right? Based on the marital status and what kind of payroll period she belongs into. So that was the weekly, this is the bi-weekly, this is the semi-monthly, which is the one that we're working on. She's filed as married, so therefore she claimed $2,100. So in this case, she belongs in this bracket right here. So that means she's subject to 12%. Okay, so $83, 12%, 1338 is the number. Okay, so I'm going to put that down here. 1338 is what she can keep. She's going to be taxed at 12% in excess, and then she gets to the government's going to tax her $83 automatically. So how we're going to do this is we're going to first state that we're going to have to find how much money she gets to keep. So in this case, we're going to subtract out what the government lets her keep. And she's earned so far $804 in excess. All right? Next step here is this is subject to an additional 12% tax. So therefore, she has to be taken an additional $96. Okay? And then we're going to add the amount that the government's going to take away from us anyway. So in grand total, for the federal income tax withholdings, she's racking up a total of $179.48. So therefore, that is going to be the information we're going to place here. So what was it? $179.48 is going to be placed here, right? And let's see, federal tax. So once again, it's a negative $179.48. Okay, so that's going to take away from her amount of earnings. And as you can see, it adjusts as it goes, right? Social Security we know is 6.2%. So in this case, right, it's going to be the 2500 times the negative 0.062. Okay, and we can enter there. So that's the amount of Social Security she's subject to pay. For this one, right, for Medicare is going to be the total gross earnings times the 0.0145%, right? And that's how much you need to do. So again, I'm not going to do California because we don't know what California is. I could do, I guess, California withholding. We could say is negative, oops. Okay, let's 0. Okay, let me redo that again. So this one is, I could say California could be -3%. Okay, and there it is. Okay, and of course that's just the employee, right? That's what we're taking away from the employee. And look at that. Now her amount that she's now subject to receive from that 2,500 paycheck is only down to 29. Okay, so that's because she has to pay all these extra taxes, right? The first three were benefits and deductions that she has to take because that's what we offer. And that's also what she has to pay in from her paycheck. So it's taken away from her paycheck before taxes. She has to pay $100 into her Medicare after taxes. And then, of course, all of these are going to be whatever the federal taxes are. So again, you have to calculate manually what the federal income tax withholding is. And then the other two, Social Security and Medicare, you already know what they are, 6.2 and 1.45%, which you have to manually calculate. Okay, same thing here. Of course, if you are gonna be having your employee take the money out, you have to also calculate the portion that the company is responsible for paying the employee. So in this case, right, the California taxes. Okay, so I'm gonna say, she has none. Okay, but however, Social Security, right? You have to match 100%. Okay, so in this case, the Social Security was 155, and then Medicare was 3625. Okay, so yes, those are things that you have to be, and federal unemployment, which we know is 6%, right, from our class. Okay, so therefore, for paying into her unemployment is going to be $150. So therefore, these are the taxes that I have to pay for having Katie as an employee, and these are the taxes that she is subject to pay from her paycheck. And once you've looked at this, everything looks good, you can go ahead and click Save and Close. So now it says here that she worked 80 hours, and if you click on Continue, now it says that this is what her net pay is. It's going to be now down to $1,854. She's subject to pay all these taxes. Oh no, these are the employer taxes. These are her taxes. So already, because of her marital status and the claiming that she took, she's subject to still end up paying, because the more money that you earn, the more taxes you pay. And then the next step is to go ahead and write the check for them, right? And we're going to go ahead and you have the option. We'll talk about this tomorrow as well. You can choose to print the paychecks, and you can choose to print the pay stubs, right? We'll talk about this in chapter 11, but yes, that's how you complete the manual payroll. It's a lot of information, especially when it comes to doing payroll manually. There's a lot of rules and a lot of numbers that you have to remember. Okay, and I'm going to go ahead and click close out of this. Okay. Any questions? That was a quick overview of how to write or use manual payroll system. Any questions? No. Okay. All right. So once again, yep, that is it for chapter 10. So, yeah, we'll talk about reports tomorrow. And okay, let's go over the questions and we can go home. Well, actually, you guys are already home. So let's go ahead and go through this questions, and we'll call it off for the rest of the day. Okay? So here, chapter 10, question number 1 says, okay, an easy and convenient way to process payroll in QuickBooks for employees on the different payroll schedules would be B. B. Use the payroll scheduler function in QuickBooks. Okay, I've skipped that because you don't even get to see it in chapter 10, which is ridiculous. I don't even know why they even mention it in chapter 10. This is definitely a chapter 11. You need to have the payroll service first before you can use the payroll scheduler. Okay? Because if you do this, like I've mentioned before, right? If I click on pay employees, right? Or I go to the employee center, you don't see the payroll, you don't see the pay scheduler. All you see is the list of people that you're going to pay. Okay? And when we go into chapter 11, when we get the payroll services, I will show you where the pay scheduler is. Okay? But yes, so you can't really do it there. Okay? Even if you go to the employee center, you don't see the pay scheduler there either. The pay scheduler is when we talk about when we enter in the services, it's going to be the very first window because it tells you who and when you need to pay your employees. Okay? In this case, you don't have it in chapter 10, you have it in chapter 11. Okay? Going back to this, so good. Question number 2 says, which of the following payroll periods is not an option in QuickBooks? You said A, quarterly. Okay. Not an option. Daily, you can pay your employees daily.
For me, it looks like all of them are
Not an option. Not an option. The question is not. So you can pay your employee daily. Obviously, bi-weekly is one of the standard ones that you're most common likely to see. Quarterly. Yes, you can pay your employee quarterly. What about semi-annually? Can you pay your employee every 6 months? No, I mean you can, but once again, it's not the best way to do it, right? So, okay, oopsies. I was actually going to show you that. So let's take a look at that. If I were to go to my employee center and I click on new employee, right? And I go to payroll options, right? And here it says that it's already set at semi-monthly, right? Let's look at the options that they do offer. So here you can pay them daily, you can pay them weekly, bi-weekly, semi-monthly, so once again, and then you can pay them on a month-to-month basis, right? Most common government agencies usually distribute checks every month. Quarterly, now that's where the line is like, wait, how can you go on the day without being paid, every 3 months? Well, it is an option, and you can do it. It depends, like if you're like, for example, like a movie star, right? You don't get paid until the project is in the process of being in production, right? So that's probably one of the examples I can say. Or you could do an annual payment. Yes, you can get paid every year, right? Basketball players, they get a contract, they get paid at the end they get paid right up front for the whole year. So an annual payment is definitely possible. However, semi-annually, that's where it's kind of like, 6 months is a little too long. Okay, so in this case, QuickBooks only recognize usually the more common ones that you would technically pay your employees with. So daily, weekly, bi-weekly, and semi-monthly. And monthly are usually your more common ones that you typically would pay your employees by. Okay. All right. Question number 3 asks, okay, which payroll item cannot be created in the payroll setup interview? So the question is, which payroll item that you cannot? A, you say commissions. We did see an option for commissions. We just didn't do commissions.
Okay, because they can vary it, right? When you work for commission.
Exactly. Exactly. It depends on the sales, right? But you can set it up as an option, right? You can do it during the interview. If you remember, the very first thing that we asked was, how do you pay your employees? So yes, you could set it up, the commissions.
Oh, it's gonna be D then.
D.
D, yes, that's correct. You can create all of the above items in the payroll setup window. And again, when you do this, I recommend you to use the payroll setup interview for any new item that you do create. Because let's say you are a small company, you don't offer vacation pay or you don't offer your benefits yet, but then fast forward 5 years later, all of a sudden you can afford it, then I recommend you to use the payroll interview so you could set that up properly. All right. So yes, you can create all of the above items at any given time in the payroll items setup, whatever payroll setup interview. Number 4, which is not an option when setting the accrual period for sick and vacation pay time. So this is the one that you had to pay attention through the setup of that section. If you need a hint, just go back up to the book. But you should have already read this. So the question is, what is not an option? D, every hour of the paycheck. Well, technically, let's think about it. An option to set up your vacation and your sick pay. If they're an hourly person working at your company, can't you kind of have the option for them to keep track of it based on every hour of the paycheck?
Yes.
Yes. You should, exactly. But let's say it's a salary person. Does it matter how many hours you work? Does it matter how many hours that you take?
No.
No. So, D is not the answer. Okay. Of course, with that conclusion, at the beginning of the year, yes,
When you put the hours, that like when you said 200.
yes, that was an option. So A is not the correct answer. Yeah, the answer question is not an option. So definitely you can set it up at the beginning of the year saying, hey, you have this many X amount of hours that you can claim. Yes, that's an option there. Okay. So your answer could either be B or C.
Every month.
Yes.
Because it shows on the paycheck.
Yes, it should. Yes. So paycheck, yes. Okay. The answer is B. You can't reset it or accrue it or set it up for every month because you're going to give your employee every month 200 hours of sick and vacation pay. That's a lot of adjusting you have to do. So obviously that's definitely not an option that you can do because it makes sense on per paycheck basis, right? if they are an hourly or salary worker, right? You can do it based on paycheck. For salaries even too, right? You could say, well, since you are a salary person, right, you only need to do a maximum of 80 hours per week. But let's say, but per paycheck, I could claim that, okay, well, if you only need to show up X amount of time per paycheck, well, then any hour after that, you could use that per paycheck, could be used as sick or vacation pay. So that is an option to do per paycheck. So in this case, the answer is B. You won't be able to do it for every single month. Okay. All right, last but not least, question number 5 says the payroll setup interview will not allow you to Aleda, you said B? Associate deductions and withholding items with vendors. Yes, you can do that. If you remember, the Merrill Lynch was one of them, right? And then when we did the medical health insurance, right, it says what vendor do you associate it with? We left it blank. Okay, so B is not an answer.
I know. Because you can add two employees with exactly the same name. I mean, they're still gonna be like, if the father and the son, and they're got both the same name, you can do that. It's still just the difference gonna be the social security.
Now, here's this. QuickBooks will not recognize Social Security.
Or they won't.
No, they won't.
Oh, so then you can, it's gonna be D then.
Yes, D is the correct answer. Okay, so,
Why it doesn't?
okay, because the purpose of QuickBooks, right? It's like building a database. Okay? It can only pick up the name. All right? So that's the whole purpose of QuickBooks is you could enter in a bunch of different names, right? You have, if you go back to chapter 1, you have up to 4,500 names that you could put in there. Okay? Now, if you read the book in chapters 2 especially in chapter 2 and chapter 4, they have that little dialogue box that says if a customer is also a vendor, you have to make some kind of variation to the name to differentiate the difference between the two. Okay? Because QuickBooks will not be able to recognize whether it's a customer or a vendor if they have the same exact name. So that's why you have to make that little variation saying, okay, if this Jerry Perez is a vendor, I have to do Jerry Perez V, or I have to do Jerry Perez C for customer. That applies the same concept here because QuickBooks can only look up by name basis, and if you have the same exact name, it will not recognize it and it will just associate that's the same person. Okay? It cannot, it will, yes, so it is D. So in order for you to make a difference, right, you may have to do some kind of variation such as a middle name. Okay? Now if they have the same exact middle name, no middle initial, then you better write out the whole entire middle name. Okay? So most cases, like if you have the father and son have the same exact name, you would address them as senior or junior, right? Or you would call them, Alexander Great number 1, Alexander Great number 2, right? So you have those kind of variations because in QuickBooks, it only recognizes the name and it doesn't recognize any information built upon that name. So it cannot tell the difference. And that's exactly the same thing as databasing. So if you use Excel will do the same thing too. It will pull up the name and file, but it's going to say, dude, these are the same exact names. But with Excel, of course, you can toggle it so it can go through. but that's here in QuickBooks. You have to have some kind of variation to have two of the same people as employees work for the company. You have to make some kind of variation, and usually that's why they have a middle initial in there. Okay. All right. So that is it for chapter 10. Once again, chapter 11 is going to actually be a quick read because once again, once you have the payroll set up, you don't need to do any work. You don't need to do any calculations.